Hey, everybody, it's Friday. We are back with another episode of the 6-5 podcast. Patrick Moorhead, how are you doing? Good morning to you. Looking sharp. Are you in bed still?
Thanks, buddy. Yeah, up at 5 a.m. Decided to do the pod from the home office. Got a flight out, going to see my dad. I'm doing a keynote speech in Miami on Monday. It's go, buddy.
Yeah, it was a go week, huge week. In fact, I made it back before the weather hit the East Coast, but I spent 3 days in New York this week. Very excited to not travel next week. Do want to put a little shout out to my mama in the hospital, having some complications. Everybody out there, say a little prayer for her. She's not doing super well this week. I know, Pat, you're off to see your dad. I think it's the same thing on your end. It's getting every moment we can with these folks. Exactly. The days go slow and the years go fast, and all of a sudden we look up and I'm the old person that I used to see when I thought my mom was an old person, and now she's she's quite a bit older.
Dan, you want to hear old? I am probably going to be a grandparent next week.
Oh man, you hear that, everybody? You hear that, everybody? Grandpa Pat. I mean, so now he can be Grandpa Six Pack when he gets that topless pick. And by the way, everybody, I think it's important. We're going to run a poll here on the 6-5 of how many of you want to see Pat doing shirtless photos on Twitter, on X. Do we reinstate the poor kid that got fired from Doge for being a moron when he was younger, or do we take shirtless pics of Pat, or both? That's an A, B, or C option for you today.
By the way, I think we threw around the idea of doing a shirtless show. So.
Shirtless show. The shirtless 6-5. The six. We could call the show the 6-pack. The 6-pack with Pat and Fatty. Anyway, great to have everybody with us. As we know, it's been a big week in Wall Street with earnings. This year, Pat, has just absolutely been raging between coming straight out the gate with CES, then Stargate and Davos, then DeepSeek. Then the big tech earnings wave. And I mean, I don't know if it's going to slow down, but, I think I told you, I think I've done 18 TV appearances. I mean, that's probably usually 2 or 3 months of normal sort of appearances. You've been all over the media and the tube. And of course, this stuff isn't like trivial. These are like massive inflections right now about what the future of AI looks like, what the future of enterprise spending, government. Of course, we didn't even mention like tariffs and stuff. Well, you and I are not economic advisors or economic policy advisors. The tech economic policy and all this stuff does it all converges upon itself. And so whether it's where semis ship, the materials required to build them, the energy required to run infrastructure, the impact that tariffs might have on corporate spending, we do see all this stuff come together, which is makes a lot of fun for us. But
totally,
I won't bore everybody with all the details. But let's just say it's been a rip and roaring year, and we got a lot to cover this week, Pat. So it's going to be another one of those sort of extended edition shows. We're going to try to keep you all on time, get it done in 50 minutes. We do the 6-5, but it's never actually 5 minutes a topic. We're going to cover Qualcomm, ARM, AMD, Amazon, Alphabet, an IBM Investor Day, as well as Coherent earnings. So almost all earnings and definitely all investor related stuff. I love this crap. I know sometimes, Pat, I got to pull you by the hair. I know you love it too deep down. I know you do. But we're going to cover all that today. Now, a quick reminder for everybody out there, this show is for information and entertainment purposes only. Well, we will be talking about publicly traded companies. Pat and I are not we're not here licensed to give you investment advice. Don't buy any stocks because of what we say. Do your own diligence is what we would recommend. That's the only advice I give. Do your own damn diligence, fools. Get it. All right. So, Pat, the sprint is on. Let's start with draw it out of a hat. No, I'm just kidding. We always know this in advance. Let's go. Qualcomm.
Yeah. So Qualcomm, net. I mean, it's just a bunch of records, right?
Ooh.
Record revenue, record non-GAAP EPS, record handset, record automotive, and with a really good guide. And then, Wall Street rewarded them with a sell-off, right? And my gosh, it took me so long to figure out what was going on but it was two things. I guess they're actually related, right? It was sequential decline in QCT handsets due to seasonality and Apple. And then Skyworks laid an egg related to Apple. And then essentially they just got completely caught up in that. And unfortunately, all the great accomplishments that they had, investors forgot about. I would have thought for sure, given their guide, because what we've seen so far the previous week is that all these companies had really good quarterly earnings, and then they had this shaky guide, right? But Qualcomm came in with a really, really good guide. So handset growth really driven by the new Snapdragon 8 Elite platform. And essentially, this is the chip that outperforms Apple's Bionic on most tests out there. Samsung just brought out their latest S25. They did a full sweep there. And then a lot, obviously, automotive is still cranking. And automotive was up 61%. IoT was up 36%. And that's pretty staggering numbers when you pull back on it. Some of the questions, right, that came up during the analyst call that I listened to, QTL guidance. I know there was some chatter about, hey, we thought that would be bigger. Why haven't you guys closed Huawei? Pretty used to that stuff. One of really, I thought, exciting announcements that Qualcomm made on Snapdragon PCs were the market share numbers. And essentially it said that they had 10% Copilot Plus PCs in US retail. And, I think that's really good. First of all, it's going, I think the biggest they'd ever hit was like 1 or 2%. So this was a big number. The other thing was that they did this at the same time that the Microsoft Windows goodies, most of the goodies that people were looking forward to hadn't even shipped. So all in all, really solid earnings. And if it weren't for catching the Apple cold related to Skyworks, I think the company's stock price would have been a lot higher.
Yeah, Pat, I think you hit a couple of good points. You dove into the details. I continue to zoom out at the Qualcomm business, and you look, record, what is it, QCT, 10 billion. That's the non-licensing part of the business. For a long time, those numbers between licensing and the technology were a lot closer. They just the diversification did not span beyond mobile and handsets. And during the time since CEO Cristiano Amon took charge, after we kind of got through this period of time with all the lawsuits, every FTC on the planet trying to take down Qualcomm. You had Apple, then you had the Broadcom takeover. And it was a little history lesson, but the history was the company had a lot of sort of headwinds that were slowing its innovation and its ability. Well, when Cristiano came in, he's much more product-centric than CEOs of the past that were much more kind of the legal law related. Mollenkopf was definitely focused on getting through that period of time. Well, Cristiano came in and said, look, we don't want to just be a handset company. We want to this connected intelligent edge is what he called it. But what he really meant by this is we're going to go from handsets to cars, to PCs, to IoT and, VR, AR, XR, so the product diversification. And so when you look at the business, right, it's like, are they on the right trajectory? If I'm an investor, is this where I would want to be looking at a company in terms of its direction?
Yeah.
It's pivoted off some of its dependencies on Apple. Of course, when you look at the Apple number, you got to remember Qualcomm still makes money on that too. And this is the cool part about the business with the patents and licensing is even if no Qualcomm technology is actually in the phone, there's still licensing that would drive certain amounts of revenue attached to the continued sale of iPhones. That's what makes businesses like this pretty cool. But look at like automotive, Pat. We didn't really talk about it, but it's running really close to $1 billion a quarter in revenue now. We've talked a lot about that $50 billion pipeline. But so you would say, have they successfully pivoted to automotive? I would actually argue that they sort of took the moment where NVIDIA went all in on data center, and they sort of took a lot of that sort of momentum they had in automotive. Now, I know NVIDIA is going to get back focused on that again now, but that was a really big move. They took a lot of design pipeline. They're driving a lot of revenue there. They got into this PC space. You mentioned the 10% of retail, but they're making good product. I mean, it's a good competitive product. And I think that third competitive product in the market's really important. And to your point, the actual real best use cases for an AI PC are still really pretty nascent. So now what we have is lower power, higher performing, very lightweight, good looking devices that have the opportunity now to add a lot of new revenue streams. So when I look at the overall business for Qualcomm, I would say they've succeeded in the mission. And the mission was not to be dependent 100% on handsets. Also, one last thing I'll note is they have kind of an interesting China outlook.
Yeah.
They're very dependent on China, but they also benefit from the fact that all the different handset makers use Qualcomm technology.
That's right.
And so if there's tariffs and a ban and it becomes more nationalistic and, the Oppos and Xiaomi's become the bigger volume and Apple actually moves out, that could actually be an advantage to Qualcomm. Totally. If Apple actually continues to cede market share in China. And by the way, then you add the Samsungs and others that they don't ship from here. They're not U.S. products and they're not shipping. So they're like, out of Vietnam? So anyway, the point is like there's a kind of this interesting tailwind that could come from what most people are seeing as a more difficult macro situation. So I look at all that and I say it's a pretty good time to be invested in Qualcomm, and the company's made a lot of progress. Let's move on to another company in the same sometimes vein, definitely mentioned in the same sentence sometimes. I'll take this. I'll put the grenade in my hand, and I'll talk about this for a minute. But ARM had a really good quarter. The company's revenue rose almost 20%, $983 million, so just under $1 billion. Now, as a bit of a context there, this is a company that was doing about $1 billion a year a few years ago, and now they're doing $1 billion a quarter. I would like growth like that. I mean, it's a little bit slower than Futurum, but I mean, I'm happy at that level. They're making more money. This has been a big focus of the company. One of the big challenges for ARM along the way was it had this really high volume royalty business, but it actually wasn't super profitable.
Yeah.
And the profitability gap was because they were basically living their life in this very low power, very low dollars.
IoT for the most part.
What's that?
IoT space.
Basically connected devices, very low cost, low per unit. So they were doing billions of units at very pennies, kind of thing. And it was driving a lot of revenue, but it wasn't super lucrative. And so now you got the company growing at a great clip. It's raising / meeting its guidance. It's part of this Stargate project. Clearly, we've seen over the last week between Meta, Alphabet, Amazon, Microsoft, that the whole CapEx is over because of DeepSeek was absolute positive horse crap. God, I don't even know. I need to put a sizzle reel together how right I was. I'm going to put that out there. You should do the same. I mean, like I said, I actually think we're going to go faster with AI. DeepSeek taught some things. I mean, it's not an all negative situation. It was just people's ability to see that like lowering costs wouldn't grow, thinking that it meant less growth.
Well, they thought the entire market was training, which there was a lot of training going on, but every time you even had to run those training, so the workloads that were trained, that inference was very costly.
Yeah. And by the way, now we can do more inference across more applications, consumer to enterprise at a level of scale. You bring down the cost, the resale value, you got margins. It pushes out from sort of core to more industry and enterprise use cases. Money can start to be made by, handset makers and device makers, as well as by app makers. There's just lots of different places to make money. Trillions of concurrent inferences, agents and assistants all running at the same time. Someone's going to monetize this. And in this case, finally, it won't be just NVIDIA. So that's a good thing. But NVIDIA, by the way, a lot of that CapEx money still going to go to NVIDIA. I mean, I like Broadcom, Marvell, others are going to do fine, but there's a lot of dollars to go to NVIDIA. And I think the market sort of recovered. That thing was been a really interesting few weeks in NVIDIA stock. We talk enough about them. We'll come back to them at some other point. The other thing I'll point out is the company's diversification from royalty to licensing is looking really good. It's a little under 50% licensing, but that's all about, the company's done really well in areas like data center and automotive, the higher end PC servers. So areas like Amazon. So you saw Amazon's big CapEx number. You see what they're doing there, but you also see that Amazon, I think the number is something like more than half now of their compute, server compute, and a large chunk of it. And going forward, that number keeps growing. Is Graviton? That's ARM. So ARM's doing really well there. So that's for instance. And by the way, Apple, if you think they're doing well, that's ARM. Qualcomm, there's ARM technology there. All of this is where ARM is doing really, really well. I'm optimistic about it. I think the company's ability to diversify, and what I keep pushing on when I talk to, you and I both got to talk to Renee, I think around earnings here, is the ability to continue to show the market they can get more margin by this more custom work, the CSS work they're doing, the customization work that they're doing. That's where you diversify away from that kind of high volume, low margin royalty revenue.
Yeah. So, if I look at just the raw numbers, I mean, they've had a consistent streak of a double beat and raises. And if I look at the revenue beat, it was in line with the other quarters, right? It wasn't the highest quarter. It wasn't the lowest quarter over the last 4. And on an EPS basis, right, they beat between 17 and 15%. But it was really about the guide, and it's almost a carbon copy. ARM has had similar degrees of performance, and there's a giant sell-off. In fact, I predicted that going in some of my kind of show notes that I had sent to Yahoo Finance and CNBC. And sure enough, it happened. I think a lot of that has to do with the valuation. Stuff that's just not being factored in here right now are things like Stargate, right? They do appear as if, they are the CPU of choice. They were the only CPU that was listed along with the Stargate announcements. Probably the only thing that could indicate that they don't get 100% of that is if there's outside financing from somebody related to an Intel or an AMD or something like that. So that's not even priced in here for the opportunity. A couple things happened with the guide, in terms of kind of an EPS, people wanted a bigger number. And if you go and look at their, at their forecasts and what they've been spending, they're spending a lot on R&D, right? And I know that's not a great thing for the stock market, but it's a great thing for stuff like me, things that I think are important. I think, increased R&D keeps that pipeline going. And I think, in a year, when we see what's cooking with Stargate and new opportunities, we'll see if the payoff was there. There were a couple analysts too who were kind of picking on the percentage of royalties for V9. They thought it didn't grow faster, meaning it was 25% in the December quarter, the same level as the prior quarter. There were a couple questions even on the call that came up from Needham brought it up, and then there were a couple notes from New Street as well that related that. But to me, not I don't know, something to be expected, just kind of weird. Final thing I'll reiterate is that you're seeing increased penetration of ARM-based hyperscaler servers, right? Whether it's AWS Graviton, whether it's Google or even Microsoft. Those are all going to be going up and to the right. Microsoft and Google will be at a much steeper percentage pace. The mass right now is Graviton, where you have 50% of their capacity, increased capacity for the past, I think, year and a half or so, has been going to Graviton. And knowing AWS, they're just going to keep putting the pedal to the metal. And we're going to talk about them and their $100 billion CapEx. ARM is going to benefit from that as well. Kind of the dark horse here is, what is Meta going to do, right? Meta hasn't shown up. They're a top 5 hyperscaler. They haven't even showed up with their ARM-based server part yet. Will it happen? I don't know. Big relationship between Meta and
AMD.
Meta and AMD, and then Meta. It's funny, I was going to call them Avago and Broadcom. So who knows where that custom processor business is going to go.
Yeah, that's really interesting. And I didn't say this, but this feels like one of those quarters where the market really feels that a lot of these companies are priced super well. And the reason that is because like good results are actually leading to selling, which means people were sort of buying into the earnings. They were seeing the momentum, but the pricing was like only had more upside if these companies absolutely destroy the results, or if your name's Palantir. Because now Palantir is worth more than AMD. It's worth more than it's catching up to some really big companies. Palantir is bigger than 3 Intels at this point. But that's just the world that we live in sometimes. I'm not saying they're not a great company. It's just super interesting to see how that sometimes the market can be completely impossible to read. Pat, let's jump into AMD then. So this one, there's a lot to cover here, and it's another one that had a very interesting response.
Yeah, beat on top line, beat on EPS. The beat on revenue was in line with the previous 3 quarters on average. The beat on EPS lower, right, from March to June to September and December, but they had an absolute smashing quarter, basically records everywhere, record client, record data center, and then a colossal sell-off that continues to this morning. What could possibly have done it? It's very simple. In the previous 2024, they had made an instinct forecast. It went from $100 million to exceeding $5 billion. And the company has decided not to forecast that number for the year. And that just sent off red flags after red flags, even though they are actually pulling in the MI350. There were also comments that said that the instinct number was going to be back end loaded, which again people look as a bigger risk here. So AMD, I understand why they don't want to constantly and chronically giving that number, commenting on that number. Particularly when it's back end loaded, but it's super lumpy with a ton of dependencies, right? Dependencies meaning things like how MI350 actually shows up, right? I mean, the silicon is up, a couple key things from the cloud, MI350 running large scale LLMs within the first 24 hours of receiving silicon, validation ahead of schedule. They are planning to sample lead customers this quarter. Another positive thing out of MI350, net new hyperscale customers in preparation for at-scale MI350 deployment. So that has got to be AWS or it has to be Google, right? Unless, because they're already in at Oracle and Meta and Microsoft. So unfortunately, it just overshadowed everything, like 50% hyperscaler share. And my assumption was in Meta, Google, Microsoft, and maybe AWS. Really a trifecta for Epic and Instinct, right? Increase adoption across cloud, enterprise, and supercomputing, and that hasn't been the case. That all three were up into the right. Client has fourth straight market share gain quarter, and you don't hear this often. We are going to gain more, right? Quote unquote, we believe we can grow client segment revenue well ahead of the market. That is gaining market share. What else here? Yeah, I think those were really the highlights. So the company, just amazing figures for the year and for the quarter. I mean, data center was up 69%. Profit was double in data center. Client up 58%. Profit was 10x of where it was a year ago. Shout out to Jack Hune and what he has been doing to the business there.
Yeah. So the issue here in the kind of falling knife that has been AMD, I think, has a lot less to do with really anything that makes sense and a little bit more to do with the longer term sort of viewpoint on this AI future. Why do I say that? Because to your point, you kind of go down the list and like look at the growth, and then you kind of look at how its forward PE score has come down substantially. So it's trading less, even though it keeps growing. And why is it doing that? It's because I don't know how else to say this, but like not being able to forecast Instinct was just one of those things that there was just absolutely no way the market would forgive.
Yeah.
Lisa knew this. They had to know this. They had to know that this was going to be one of those step back to go forward. I think the problem is it's kind of a pay now or pay later thing. If you get too aggressive and you miss, you're going to get hammered all year long. Yep. If you come out now, you're going to sort of get the penalty right now. And then if you can sort of exceed expectations, people will see that as the opportunism, and it will start to push it forward. The other thing is like, you kind of mentioned this, I think somewhere along the lines that clearly there are just things people do and don't care about. Now, not to switch to Intel for a minute, but when they basically canceled the first GPU, the Falcon Shores, you would have thought, oh my God, that's a huge thing. And like it would have sold. The stock went up. And why? It's because nobody believed that product was worth a crap. I mean, nobody believed that was going to be a competitive part. And so they were actually favorable to the idea of just cancel it. We'll wait. I mean, the stock's already trading at book value. Let's see if you can come out with something better if you actually don't rush it to market. Yeah. In this case, it's just a situation where, look, all the great work being done with Epic, it's not to say that that's not great work. It's just, I think people have sort of largely put into their spreadsheet that the future of data centers isn't CPUs. Yeah. And, it's going to be more accelerators and AI. So seeing Epic do well and seeing Instinct not get a forecast probably came with a certain amount of penalty points. What's that?
Sorry, I was saying goodbye to my wife.
Bye.
I thought I was on mute.
Bye, Paula. Anyways, no, I didn't hear you. I just saw your lips moving. And then, like PCs, I think as a whole, we know that market just doesn't trade with a ton of premium. PC is an exciting space, but it's not it's not the data center market. It doesn't come with those margins. It's super competitive. The fight for market share is there. Everybody knows that Intel is getting super aggressive. So even if AMD is doing well, they're going to have to fight with a more aggressive Intel that's basically fighting for its life right now in terms of maintaining its market share. And then you got new entrants in Qualcomm, and then you got areas like embedded that tend to be higher margin but have been slower over the last few quarters. And then so what did it all come back to, Pat? It all comes back to Instinct. And so my take on it was no Instinct number was a leading indicator of a lack of clarity or optimism. It's one or the other. And so my guess is it's more clarity than optimism. I think that there's a lot of reason. I think you and I listened to Mark Papermaster with Oracle talking about software. They did get 0 to 5 billion really quickly. Like, I think part of it is like, can you realize how amazing that is to go from 0 to 5 billion? Right? The problem is NVIDIA went from 0 to 100 billion in forecast in a very similar period of time.
Kind of, yeah.
It was very small if you go back 2 years. So I'm just saying, I think that's the comparison, whether it's a right comparison or a wrong comparison, that's the comparison that most people are using in their head. And then
no, dude, I'm just,
yeah,
NVIDIA wasn't zero. They've been
no.
doing
You're right. It had a few $1 billion in that space, but it was smaller than its gaming business not that long ago. It wasn't very long ago.
100%.
And the use case didn't really exist in its current in the current makeup of the use case. But the bigger point is just like, this is where there's a lot of competitive pressures. I think you and I would both answer that they are the clear number 2 in terms of flexible GPU architectures for big AI applications. The question isn't just about NVIDIA, though. I mean, NVIDIA is fighting for its own relevancy in this space right now. It's about Marvell and Broadcom and hyperscalers building custom chips and Grok and Samba Nova and these very specialized inference chips. And all these things that are going on is uncertainty. But the one thing that we know for sure is that the market's actually getting bigger. So even after DeepSeek and 6 million instead of 6 billion, like, there's a lot of growth here. So I think for AMD, my recommendation is if they can nail a meaningful competitive software stack, the hardware will follow. I think if the problem is trying to move the hardware faster without the software, will continue to provide it a challenge. All right, let's by the way, 5 billion, not like a big challenge. They're clearly doing pretty well.
Yeah.
Let's move to Amazon, Pat. So, lot to cover off on Amazon. You and I are less commerce folks, but this is interesting. The company now has 3 $10 billion plus a quarter businesses now. It's not just a cloud and commerce. It's also cloud, commerce, and advertising business. And by the way, they're going to start shooting rockets into the sky soon, and they're going to have a 4th business that I expect that will compete with SpaceX that's going to also make money. What's that?
Kuiper. Led up by Panos Panay.
Kuiper. Anyways, feels like a Street Fighter character or something. Kuiper. Anyways, the company, double-digit growth, 187 billion in the quarter. It beat its earnings by a long shot. It guided sort of conservatively. And by the way, this is why I think everything's been selling off. I didn't specifically say this, but everything's been selling off. Some of it's been the guy. There's been a little conservatism in the guides from these companies. I think everybody's still a little unsure. I mean, we saw those tariffs. Wasn't it only like the Monday of a week ago that like tariffs were going to take our economy to zero? The market had gone down like 10% overnight. Crypto sold off like 35%. It seems like every quarter we get one of those days. The Japan carry unwind thing, the DeepSeek thing. It's becoming like more and more frequent. But anyways, the revenue is growing, very, very sharply. AWS still grew 19%. Now that means, I always have to say this, that at 31% for Azure and Google, there's probably some share shift that's going on. There's also a law of large numbers thing with AWS. It is so big that growing 20%, you're talking about over $100 billion run rate now. I think it was 107.
Yeah, Jassy claimed 115 billion run rate.
Okay, 107, I think, over the last 4 quarters, maybe, and 115 run rate.
Yeah.
And so that's really, really good. The company did come out, Pat, and say they're going to spend over $100 billion in CapEx.
And that's the biggest number we've heard so far.
And then they made some other strong announcements. This is the company that's really kind of taking the challenge of infrastructure in the nose. They've been really successful at Graviton. I think they're trying to double down and really get utilization of Trainium 2 to hit the market. They threw out a number of about 40% more efficiency. The only thing then the current Hopper, I believe. So I think that's versus H200 maybe. I've been trying to make sure I'm 100% accurate on unpacking that one. This is another situation where the efficiency is great, but software is going to be a big factor. Trainium is not the same as a GPU in terms of being able to be flexible for all the use cases. But for specific use cases, this is exactly what we've been saying: higher performance out of a lower cost and power envelope. So that was, something to be optimistic about. How much of that 115 billion ends up where? That's a little bit of the assessment that people need to do, because a lot of people, I think, make the assessment that 115, that's all going to NVIDIA. It's like, no, there's a lot of parts and pieces in there. You got to buy the high bandwidth memory. You got to buy the CPUs. You got to buy all the networking gear. You got to buy the power and conditioning gear. I mean, in some cases, this is physical building sites, running in cables, power, cooling technologies, all that stuff is part of these spending numbers. But there is big dollars being spent. Every one of these companies is indicating they have clear line of sight to enough revenue to justify this type of CapEx expense. The other thing, though, is like you have to look at these companies' balance sheets. What else are they going to spend the money on? I mean, so, these companies that have trillions, high hundreds of billions and trillions, this is the big bet. This is the future. They have to invest big. They have to invest out in front of it. And don't be surprised that the average person, the average analyst investor cannot see the future. I would bet on the Musks and the Jassies and the Satyas to have a better understanding of the revenue future than the people that are working at banks that are set to evaluate them.
Yeah.
And so there is a little bit of that. I keep going back to trillions of agentic and assistants operating concurrently, all driving pennies, as I said in the movie Office Space, Pat, fractions of a cent rounded off into an account, with lots and lots of transactions. I think that's what the future looks like. I'm very optimistic about, Amazon's business. And on a positive note on commerce, Pat, they did overtake Walmart this quarter. So biggest in the world.
Dan, great discussion. I'm going to hone in on you did leave me a little bit of oxygen, but
big company.
I mean, this company beat on EPS by 25%.
Yeah.
Okay. Which it wasn't a decline. In fact, it was the largest beat in 4 quarters. So, and then revenue, if I look at the average of their beats, they missed in June and they beat in March and September. It was right along that average. So, yeah, there's kind of this reckoning. I did a lot of digging on this AWS number. I went through the transcript, and there was a tremendous conversation about supply chain constraints for AWS. And I got to tell you, and hey, we're going to get good in the second half. Isn't that crazy? Microsoft talked about the second half, and we're going to talk about Google and the challenges they had. AWS said better in the second half. The funny part is nobody has said GPUs yet. Not a single person. What Andy Jassy did talk about a lot was even cooling apparatus, right? Which, by the way, could be related to this rumor about NVIDIA GPUs and cooling systems out of these ODMs. So here we are. We have 3 people talking about supply chain issues and 2 saying they're going to get healthy in the second half. The only thing I can think about is GPUs and cooling, but nobody has said the word GPUs. So got some investigation I'm going to do. I'm going to do my specific channel checks and see if some people will tell me directly.
What do you think it is? What's your gut?
What's that?
What's your gut?
My gut is that it's GPUs and everything else to make a GPU server. Cooling. Also noticed that Lisa Su talked about back half loaded, right? So there's something that is going to make this back half loaded that has to do with AI, because the capacity constraints were pointed out by Andy that this was an AI challenge. But with all that said, this company has the best array of silicon at scale, in-house and also merchant silicon. Their CapEx is staggering, folks. $100 billion. What is that? Was that twice what Google put out there?
No, I think Google said 75, but they were like 110.
Sorry.
No, I'm just saying, I think it was 65 Meta, 75 for
Microsoft was 80 billion. So, and if you look at where they have Trainium and Trainium 2, Inferentia, the homegrown silicon they have, they've got a pretty wide array to get there. But listen, action item for Pat and his team: figure out what this second half bottleneck is. But all in all, I mean, we're looking at $115 billion AWS business that is incredibly, ridiculously awesome profits, and that has not subsided. And when you've got big growth on big numbers with big margins that are going to continue with increased investment, I think they're going to do just fine.
Hey, we didn't even really mention, but these companies too have this amazing customer zero story. I mean, Amazon, all this AI is amazing for commerce, advertising. Like, it's not just to sell, instances in the cloud, Pat. I mean, all this infrastructure they build out, and I mean, Meta is probably the best story in this particular case. But I mean, there's a lot of that going on with these companies. Google and its search business, they can build things, they can use them, make money off them, and then also resell them. So it's pretty powerful. I tend to think the sell-offs are more about perfect pricing and a little bit of uncertainty. Let's jump to Alphabet.
Yeah, so Alphabet, miss on revenue, the first miss on revenue in a very long time, at least 4 quarters. They had an EPS beat that was very, very small, a beat of about 1%. Previous quarters were 14.7, 2.5, and 25.6. The interesting thing, though, I think what rattled people was the Google Cloud number. And isn't it wild that Google Cloud can't make the stock rock and roll, yet it comes in and they miss on that, and the entire stock crater. So I went in, checked the transcript, and sure enough, capacity issues, right? Issues in operations. Very similar story as we've discussed with AWS and Microsoft. One thing that I want to point out, though, is were some of the big wins that Google Cloud had. So first and foremost, big increase in Op Inc. dollars and Op Inc. percent. Huge acceleration of Vertex AI, which is an end-to-end AI platform. Check out my call-outs on X that I pulled from the transcript. And also, last but not least, Google Cloud is outpacing market growth on a percentage basis and hence gaining market share.
Yeah, and I mean, you and I always have to put that little caveat of inconsistent reporting that always makes it a little bit hard to know what's, kind of banged into these cloud numbers that they all use. But I mean, I think over a period of time, when you see the delta of, mid-teens to low 20s versus high 20s to mid 30s, that you have to imagine that there is some tightening of market share. I think AI, like I've said a lot, Pat, AI was a big reset moment. I mean, I still think Google and Alphabet, but Google specifically as it relates to the cloud, has done really good in terms of this era and being in a good position in this AI era. I think some very, very good moves have been made. I think Vertex has been a compelling product. I think there's sort of provenance in the AI space with Brain and DeepMind. It gave the company a bit of a permission early on to come in and show they've been a customer zero with TPU. They spent almost a decade building AI accelerators for their own use cases. They really barely started to make that any sort of meaningful revenue instance, but I would imagine at some point in the future that will continue to be a diversification play for the company. I mean, they trained Gemini and Pro on their own silicon. Not necessarily winning the market share yet. Gemini is definitely behind. But I think based on its install base inside of Apple phones, the install base on Android platforms, the install base with my grandmother and everyone that uses Google and doesn't use, LLMs as a search mechanism, does give Google, I think they probably have the second biggest pass on winning early market share besides Apple when it comes to the generative users, because I think their sort of core install base is so substantial. And, by the way, did you see OpenAI is supposed to be raising money at $260 billion valuation? This in less than a year, they've gained another $100 billion in valuation while continuing to lose money. And someone copied their model for $4 and 6 shoestrings and a paperclip. But I really cannot understand how this is not like I think Matsuyoshi Son. I think he's gonna come out that he's wearing a Bernie Madoff mask. I don't know if this is like a secure kind of racket or what's going on. I just can't get to there. But maybe there's something with AGI that you and I just don't know about. I mean, they don't call me.
No, man. Let's talk about all this in 9 minutes.
Did I get off topic? I do that a lot. Anyway, so Google's. I had a lot of commentary across the web about this. I'm just not spooked at all about this stuff. I think the spend is legitimate. I think there's a reason these companies are smarter than FinTwit. I apologize. It's just the case. And let's get on to IBM's Investor Day.
You were there, buddy. You were there live.
I know. Just kind of taking a
You're
breath.
Just everywhere, dude. Dan's everywhere.
Dude, I talk a lot, so I was just like, I need to get get my win back. But this week on Tuesday, the company brought together the investor community to basically do a victory lap. Unlike all the companies we talked about today, they all sold hard on their earnings. You know who didn't sell hard on their earnings and actually got it? You see we talked about this like 2 weeks ago with the super green candle.
Yeah,
that was IBM. I mean, okay. When in the world did IBM get the mega green candle of growth after an earnings report? Well, what happens is when you change your forecast from something like about a 1% model to a 5% growth model, that's like a 500% or 400 or 500% growth. But you're also, another company that's doing a $0 to $5 billion revenue victory lap as it's seen its generative AI business go from $0 to $5 billion in just 6 quarters. But this was a broad day. Company kind of marched every one of the businesses on stage. Arvind, I think, could feel very happy to know that kind of long before AI was an important topic like it is today, they changed their kind of whole core business thesis to hybrid cloud and AI. I don't know if they're going to have to change it to AI and hybrid cloud at some point, but the ability to kind of say, hey, we got it right with Red Hat. Hey, we've got it right with small language models. They showed some really compelling data, how basically they were able to do, small language models with Granite and StructLab fine tuning to get like 96%, performance improvements. You got to look. The tweets are in the show notes. I don't have it all to memory, but much greater efficiency, much more performance, smaller parameters. And they're showing the ability to do that, which is super impressive because this is what I keep saying, like the small language models, the tuning, the forking of bigger models and using them for industries. This is going to be the scale enterprise use case. And IBM is sitting in a really good position in this particular part of the market. There's also some other little wins, like talking about, the $1 billion of IP revenue related to the research it's done on quantum. And nobody gives the company any valuation for what it's done, but it actually has one of the most compelling quantum roadmaps in the marketplace. And they've got the market use cases. One of the things we don't talk about this a lot, Pat, but early in any technology transformation cycle, there's always money to be made in services. And IBM is one of the only technology and services companies that does the full GSI consulting business, as well as has a huge technology and software portfolio. And so that's really promising. And then the last thing I'll say is Rob Thomas got on stage and actually showed how their software business had actually exceeded the Rule of 40, which I don't think anybody thinks of IBM software as a Rule of 40 company. I think they got to Rule of 41. So that's a really impressive stat for a company that has a huge software portfolio and doesn't necessarily have that sort of typical SaaS rocket ship growth. So hit a lot of things right on a lot of different cylinders, Pat. It was a really positive day, and I think that's something people hadn't come to expect out of IBM, but I think they've really turned a corner under new leadership over the last few years.
I wish I could have been there, had some on-site customer visits that I was pretty committed to. Wish I were there with you. IBM stock in the last 6 months, it's up 36%. Last month, right, it's up 13%. And this is a impact from not only its earnings, but also this Investor Day. I don't think that analysts incorporated the kind of 5x growth between prior year and forecasted year. But I like some of the nuggets, whether it was quantum, whether it was the cost of these SLMs, to run. And Dan, we always talk about the end beneficiaries of this. IBM is an enabler of biggest enterprise, particularly regulated AI, and they're not just going to dump everything into OpenAI and call it a day, right? So huge opportunity for the company, and kudos to IBM and Arvind, quite frankly, having the vision to turn the company from a services business into a product software.
And really quickly, because I want to get my stat right. So we're doing this, Signal 65, one of our favorite children, Pat. We're doing this validation. Some of the numbers they showed about cost efficiency on performance on small models. So granted, 7 billion plus model plus Instruct Lab versus ChatGPT-4 Turbo got 4% better performance at 98% lower cost, Pat.
That's crazy.
Llama 3 70 billion got 6% better performance at 75% lower cost. So these are the efficiencies you and I have been beating the drum on. So now I want to move to sharks with companies with laser beams. You and I had a great conversation in the show notes with Coherent CEO Jim Anderson. They had earnings this week. Pat, take us home with the rundown.
Yeah, so listen, a top line beat that was higher than the previous 3 quarters, an eye-popping beat on EPS by 41%. Previous quarters were 20%, 2%, 25%. Since Jim Anderson came in, actually last 6 months, the stock's been up 66%. No, I know. Last 5 days, it's up 13%. And Jim's been in there since June of 2024. This is a company that benefits biggest right now on the back of AI growth in the data center. All of this switching that goes on optically, that's essentially Coherent. Not only the transceivers, even the physical chassis that goes into. Coherent's in a lot of businesses, right? OLED, display manufacturing. They don't actually just do the manufacturing, but what they help is basically laser beams to cut OLED wafers to put inside of devices. And here was another cool thing that I thought here. The telco market that has just been in the toilet for what, 2 years, 2.5 years, Dan? When I look at equipment makers like Nokia and Ericsson and all related companies, but it looks like there is a recovery in datacom. 2 sequential increases in revenue. Industrial is not good, still is not good, and I've never heard a person say that it was good, and that was very consistent with what we saw from Coherent. So lasers, silicon photonics, 3.2 terabit transceivers on the roadmap, shipping 1.6 terabit transceiver products. Sales anticipated in 2025. I like the roadmap. I like where Jim is taking this company, and seeing what he did at AMD and Lattice. I didn't expect the stock to be up into the right this quickly, but they're taking advantage of the AI crazy.
Yeah, you hit it. This was a bit of a company looking for the moment. I mean, we all know that photonics were going to be a big opportunity as we try to move more data more quickly. Historic mechanisms may work in some cases, but we know in other cases we're going to need to be able to transport data faster. Who are the companies that really do this? I mean, really, we're the guts. We talk about pick and shovels, and a lot of people talk about that. Well, this is like the pick and shovels of the pick and shovels. Like, whether it's the modules or supplying the technology, even materials, they kind of do all the different parts there. You hit it on the head. I mean, industrial is moving slow. Comms is transforming a bit slower too. But this is a data AI moment. And if you're talking about the transport of data, AI, this is something that Coherent is really well positioned for. They supply a lot of companies, that are doing silicon photonics. So, they do the full, module, but they also supply a lot of companies as well. So they make money a few different ways. And this is sort of Jim's specialty. He seems to be able to come into these kind of companies that are in the semi space that have some exciting opportunities. And he seems to know how to really maximize quickly and get them moving in the right direction. It's also a testament to Jim just as a leader, kind of how his style is, his culture. He's very hands-on.
You ever notice he never takes credit for anything and never has? Not even a hint.
No, it's awesome.
Not even a hint.
Super humble. I heard he's also very good at driving race cars, but we haven't had a chance to do that yet. But he also, I love that he went out and I don't know, it was 50 countries and visited people. There's some leaders that, they come in, they get in their big office, they get their teams, and there's other people that they're flying around on planes and sleeping in hotels and living out of a bag, and they're showing their company that they're in the trenches and ready to go to war.
Yeah, executives that come in and tell them what they have permission to do and permission not to do.
Yeah,
it's rough.
They approve POs and different things. Hey, I mean, we have some companies, Pat. All jokes aside, we have customers and companies that you and I both know that literally still have CEOs. These are multi-billion-dollar companies that approve every hire. There's various levels of joysticking. I think what it comes down to this is Jim's really found a great balance of being a leader. He's also very technical, very competent, and you're seeing it early. Like I said, there's not all the credit can't be given to the new guy. There's had to have been some good work that went into this coming in, but he was definitely the man for the moment, and the company was also well poised for the moment.
Yeah, I'm looking forward to their analyst day this year. Right, they can lay pretty much everything out. That's when we'll see the grand plan.
Let's go see the grand plan. All right, everybody, that's it. The bonus episode, the 7.5, the 7.10, whatever it is we do here. 248 in the books, Pat. I know we did tease that there might be a new format. It is coming. We promise. It's just been crazy this year.
We want to make it right. We want to perfect it.
We want it to be perfect rather than good. We're going to let perfect get in the way of progress. That's how we do things here at the 6.5. Just kidding, everybody. Thanks so much. Coming soon, some updates on the 6.5 Summit as well. That's coming to a audience town computer near you. But for this episode, for this show, for 248, for Patrick Moorhead and myself, subscribe, be part of our community. We love you all, except those that we don't. We'll see you all later. Bye-bye.
Bye-bye.